Good morning, one and all. I welcome you all to this today two of the international conference on the theme Business Renaissance, the Era of Digital Cure. The essence of this conference lies in understanding the ever evolving technological landscape and seizing the ensuing development opportunities it offers to business, service providers, institutions, and all other stakeholders. An investment in knowledge pays the best interest, to quote Benjamin Franklin. I welcome you all to the first session of the day, Traversal through the FinTech World. Now, I request Ms. Krishnaveni, Assistant Professor, Department of Commerce Self-Supporting, to deliver the welcome address.
Good morning, everyone. On behalf of the Department of Commerce Ethiraj College for Women and the Madras Chamber of Commerce and Industry, it's my great pleasure to welcome our esteemed speaker, Ms. Alicia R. Damle, investment, finance, and audit professional, to conduct an informative session on traversal through fintech world. Alicia Damle is an experienced entrepreneur, capital market professional, and audit and financial practitioner with a cumulative 30 years in these fields. Her expertise include public and private markets, public accounting practice, risk management and advisory services, and academic experience, bringing a broad and well-rounded perspective to her roles. Executive leadership positions held include Chief Investment Officer, Chief Financial Officer, and Interim Executive Officer. Now, in her third decade as investment professional, Ms. Damle has a strong investment track record at both large investment firms and her own fund, including double-digit outperformance during market crisis. Prior to this, Alicia was in public accounting practice at a Big Four firm. Her entrepreneurial expertise also includes nurturing and advising startup in asset management, fintech, and tech service sector. Ms. Damle's entrepreneurial, audit, risk and investment expertise has been valued at board level for over a decade. In turn, Alicia has made impactful board contributions to diverse organizations, including Canadian Race Relation Foundation, Business Board, University of Toronto Board of Governors, and Manhattan Graphics Center. Board relationship role include audit committee and investment committee chair. Ms. Damle is a CFA charter holder and holds Charter Professional Accountant and Chartered Accountant designation. Her academic credentials include an honors BSc Pharmacology and Toxicology and MBA Rotman School of Management, both conferred by University of Toronto, Canada. We welcome you, ma'am. Now, I kindly request Ms. Damle to take over.
Thank you so much. To all of you, I hope I get this right. Kale Vanakam and Namaskaram. It's been a long time since I've had to speak any of the Indian languages. I do speak a little bit of Hindi and a little bit of Marathi, but I think my grammar is a little suspect. So I hope.
Thank you so much, ma'am. So nice of you to learn our language and say good morning. Thank you so much.
My pleasure. My pleasure. I'm afraid all the rest of my comments are going to be in English, but I know that you are all perfect English speakers, so we will have no difficulty understanding each other when we speak in English. So I look forward to making this presentation.
Thank you, ma'am. Thank you, ma'am.
I can see the slides on my screen. Isn't technology wonderful? We are thousands of miles apart, yet we can communicate with each other and also, I hope, go through this presentation together. So let me begin, and I hope that you will find the information in this presentation helpful and useful in particular. The title of the presentation, as was mentioned, is the Traversal Through the FinTech World. For the last almost 10 years now, I've been doing a fair amount of work in the FinTech space, and I personally think it's really exciting, and perhaps I might share some of this with you. So let's begin. So let me start off by asking you a question. Could you name a fintech, perhaps one that you've used, or perhaps one that you may know of? Any suggestions on some fintech names that might be familiar to you? Perhaps you could type them as a comment. I'll just pause for a moment to see if there are any suggestions on a fintech. I'm not sure if the comments are coming through, so let me continue and share this slide with you. Here's some names of some fintechs in India specifically. Perhaps some of these are names that you recognize, like Paytm, for example, or BillDesk or Rupee Power. A lot of fintech names actually that are active, and many of which are doing extremely well on the Indian subcontinent. On this slide are some additional fintech names, some that you might be aware of, perhaps some you haven't. These are names that are not just in North America, but in other parts of Europe, and perhaps you may have heard of them as well. Some of the large names here are names like Square and Plaid. Cabbage is a small and medium loan provider. Other entities like Venmo and Zettle are ways in which to transfer funds from one consumer to another. But as you can see, just like in India, lots of fintechs in many other parts of the world, and growing, by the way. I thought this chart might be of interest to us. Looking at the occurrence of the search term fintech, this chart I produced it through Google Analytics starting back in 2004. And you can see that pretty much from 2004 to 2014, wasn't a lot of search going on the term fintech. But since then, it has really exploded. Right? And Google Analytics, this is actually a pretty good indicator in terms of sort of what is uppermost in people's minds, because of course, when people are interested in a particular term, they go onto Google and they'll type it in, and essentially Google tracks what is popular versus what isn't. So as we can see, substantial interest in fintech, in the term fintech, starting about 2014. So what is fintech? I thought I'd perhaps just start off with just some background information in terms of what that is. We can trace the term fintech, though not entirely in that context, to an article that quoted Bill Gates in 1984 in a Newsweek article. Bill Gates was quoted as forecasting the convergence of technology and the financial services industry. And of course, more than 3 decades later, fintech is here to stay, and it has become an industry segment of its own. Some definitions of fintech. Well, it's a novel application of technology for a frictionless customer experience. So applying technology to enhance the customer experience within the financial space. Alternatively, it's technology that's disrupting sectors or segments such as mobile payments that you might be very, very familiar with. I'm starting to see some comments in the chat regarding some of the fintech names you might be familiar with. And the ones that I see, Adyen, Zuora, Stripe, Policy Bazaar, are very much consumer focused, as you would well expect. And mobile payments, money transfers, loans, and asset management are prime examples of where there has been the application of technology to disrupt these aspects of the financial sector. And a third definition of fintech is essentially companies that are making better use of data, right? Lots and lots of data essentially is available. And we'll talk about this later on when we come to the banks and compare and contrast sort of the state of the banks versus the state of the fintechs on a couple of different parameters. But essentially, fintechs may be described as companies that are making better use of data in order to create a frictionless customer experience, right? Provide customers with a frictionless customer experience, i.e., a better experience. And the technology is essentially enabling that. So, what has driven this opportunity? First of all, technology is critical to support a service offering, particularly in the banking sector. There's been a tremendous growth and saturation, actually, of smartphones. In India, we'll see some statistics shortly, but smartphone penetration is expected to grow significantly over the next 3 years, according to some of the surveys that are out there. And I suspect many of you have got a smartphone in your pocket. Many of you have grown up with a smartphone and have this powerful device in your pocket that allows you to find out information about pretty much anything you want in an instant, right? It gives you an incredible set of capabilities that are powered by that little device that oftentimes is sitting in your back pocket. In addition, another driver of the fintech opportunity is the increasing recognition, not just of central bankers and politicians, but others as well, recognizing that that portion of the unbanked or that portion of the underbanked population can now access financial services. Customers, generally speaking, almost in every country, you get a fairly significant portion of the customer base that expresses dissatisfaction with the banking service providers they have choices of. Banks are oftentimes, you have to have a bank, you have to have a bank account essentially because it's really a public good, but it can be a frustrating experience for many people as well. So the fintech opportunity can really reduce those friction costs in the customer-bank relationship. In North America, in particular, post the 2007-2008 subprime crisis, a lot of people were very mistrustful of banks. I think for the most part, we've gotten past that. It's been more than a decade since that crisis. But for a number of years after that crisis, we had a lot of people who were quite mistrustful of the banking system for the most part. So here's the next couple of slides are sharing some information on India specifically. This information has been taken from a Reserve Bank of India report that was issued, I believe, in November of 2020. But the key things you want to take away from the slide, first of all, is the steady growth in volume of transactions as well as the value of the transactions, whether it be large value credit transfers or retail credit transfers, debit transfers and direct debits, as well as, of course, card payments and prepaid payment instruments, right? So the uptake, as is measured by the volumes, the number of transactions, as well as the rupee equivalent value of those transactions has been growing substantially. The 2020, this global pandemic that we are slowly coming out of at this point has had an impact in certain parts of the financial ecosystem, but the anticipation is that we will recover from that, right? So we can see that the fintech opportunity is being supported by continuous uptake by people, not just in terms of more and more people, i.e. increased penetration, but also the volume of activity that is being handled by fintechs. This slide here is simply supporting some key components around the uptake of fintech, which of course is broadband usage and mobile penetration, right? We're seeing tremendous growth in these various components. Again, from the RBI report for the period March of 2014 to April of 2020, you can see the cumulative numbers of individuals in terms of their telephone subscribers, in terms of internet subscribers, mobile penetration, 86% based on this data, broadband penetration as well, right? Significant growth and essentially everyone coming online, which is actually a tremendous opportunity for all of these citizens to be able to avail themselves and actually make a big part of their lives a lot easier as well. So the next few slides, I'd like to just share with you some information about how, at least from my perspective, looking at it from the way in which the fintech space has developed in this part of the world versus the way in which the fintech space is being enabled in India. And it's very curious, but the Reserve Bank of India, the RBI, has actually developed a systematic approach, a systematic process in order to support the development of fintech. And they're doing it, and these next slides essentially show you how they are enabling the continued development of fintech. So we have three separate layers here. We've got the identity rails, we've got the payment rails, and we've got the data sharing rails. And here are the different components within that. And I'll walk you through each of these segments as we continue. So first, let's take a look at the identity rails. I'm sure that all of you have got your Aadhaar number, right? The equivalent of your ID number. And the rollout of this has been foundational for India in terms of the government being able to provide a range of services, right? That ID number for each individual, which is unique to that person, means that that individual can be directly connected and identified for a range of services, whether they be from a government, from another business, from a corporate, whatever the case might be. So the development of that project, which was many, many years in the making, is just a remarkable opportunity and foundational in terms of a range of services that individuals can now directly access, eliminating a lot of that frictional cost that I referred to earlier. So we've got a standardized shared identity verification in the identity rail. Moving to the payment rails, in a similar fashion, this is essentially standardized shared payment facility. By the way, the word rails is simply referring to the fact that this is foundational, right? Think about a train. Trains run on rails. Rails are that infrastructure that needs to be in place, and then it can be a freight train, it can be a passenger train, it can be any kind of train, right? A long train, a short train. All of them use those rails, right? They all run on those rails. So that's the context in which the word rails is being used. It simply means that foundational infrastructure that's available. And then the third component is the data sharing rails. And here, essentially, you have standardized data sharing and security facilitated. Notice that in each of these three components, you've got standardization, which is really, really important, right? When you have standardization, it's a common language, essentially. You don't have this entity using the terminology in this way, this entity in another, and someone else doing something different. Everyone's sharing a common language in terms of being able to access the data, whether that is the identity number, right? Think about your identity number. It's a fixed number. It's one person doesn't have 8 digits and another person has 20 digits. Just in terms of some very simplified examples of why standardization can be so important. And applying that to each of these three levels, whether it be identity, whether it be payment, or whether it be data sharing, means that it enables building on top of this infrastructure much, much more easily. So looking at this, with Aadhaar, we are at greater than 92% issuance. So this unique ID essentially enables efficient verification of the individual, right? So for both parties, both the individual themselves, ease of identification and verification of who they are, and for the party that they're dealing with, confirmation of the verification and verification of who the customer is and who they're dealing with. Similarly, at the payment rails level, you have something referred to as the UPI, which is the Unified Payment Interface, and this essentially is allowing streamlined payments and fund transfers in between entities, so person to person, or business to person, or business to consumer, or business to business, right? B2B, B2C, or C2C directly. And then at the data sharing level, you have things like aggregator accounts or account aggregators, essentially, which allow standardized supporting of regulated, secure customer data sharing. Because remember, customer data is confidential, it's critical, right? And when that information is being shared, the verification may be sorted out, but ensuring the security of that customer's data, that customer's confidential personal data, is really, really important as well. So having that data just flow between entities, there have to be appropriate controls in and around that. So looking now from the investment side of things, this was a chart that I thought was really informative and really interesting, showing you how large or how high the growth has been in the global fintech investment. From the perspective of both the funding amounts, you can see how large that has been in the most recent years, how it's just taken off, as well as looking at the number of rounds of funding that have also taken place. And you can see that the number of rounds has been increasing dramatically as well. Enormous interest. The private equity, the venture capital space in India has literally just exploded. Growth has exploded. It has been supported starting with the Bankruptcy Act that was put in almost within the last 10 years, as well as a lot of supporting legislation that has come into play, as well as instituting the ID system and putting in a lot of these sort of what I would call the backbone of building out services, right? Before all of these services could take off, that backbone of infrastructure, that backbone of setup, if you wish, needed to be put in place. And I've been watching this as an investor in India over the last decade as this has been slowly coming into play. And this has taken time. It's 1.2 billion people. It's a lot of change and a lot of infrastructure that has to be rolled out. It's a little bit like looking at from the outside at enabling 1.2 billion people to vote, right? It takes a month for this to happen, essentially, whereas where I live, it takes just a few days, fewer people, different approach. So building in that structure that's required in order to facilitate takes time. But India has made tremendous progress, and it is now seeing the benefits of putting in all of that effort to put that in place. So it's really, really an exciting time, to be honest with you. I thought this slide might be of interest to you. You can see that India, this slide is taken from a KPMG report that was issued not that long ago, January of 2022, earlier this year. And what it lists are the top 10 funding, the top 10 fintech investments that were made just in Asia Pacific. And if you look at this top 10 list, you will notice that there are 4 Indian fintech investment rounds that are in this top 10 list. So that's telling you how just the level of interest for investment in India. In fintechs in India, you can see what the amounts of those investments have been as well. And you can also take a look at the funding rounds. So I believe one of them is a Series G and a Series F. Though that simply refers to the number of times that this particular entity has raised funds, and it starts alphabetically. So a Series F is A, B, C, D, E, F. So they've had 6 rounds of raising capital, and that's pretty good, right? That's very good, in fact, because what that means is that they've had a steady availability of investors who've been willing to give them money. And of course, investors are going to give them money because they've got a really good idea and that they've been implementing successfully, of course. So really, fabulous to see 4 of the top 10 transactions for 2021 originating in India. Let's talk a little bit now about how fintech fits into the banking value chain. I'm not sure sort of where you are with respect to this, so I hope I'm not sort of repeating information that you might already be familiar with. But if we think about the banking value chain, you've got your wholesale banking markets, your wholesale payments and clearing, et cetera. You've got your retail and commercial banking related activities. Of course, you've got your customer relationships. And then on top, of course, you have the all-important payment ecosystem. And for each of these different components of what a universal bank offers, you can see the where fintech has essentially stepped in, right? So with wholesale payments, you've got the distributed ledger or blockchain, essentially. For wholesale banking and markets specifically, you've got high frequency trading and algorithms. For the customers, for the retail customers, you've got peer-to-peer lending, you've got big data analytics that are being done, as well as receivables financing. For customer relationship, there's the aggregators, there's the comparison sites, for example, switching tools that might be available, robo-advisors, right? Those automated investment services, service options that are coming in. And from a payment services perspective, you've got digital wallets, e-money, perhaps services that you may have used or someone you in your family may be using regularly, and of course, cross-border payments as well. Want to just switch for a moment and take a look at fintech and banking, but look at it from some different perspectives. So first, let's begin. Let's begin with the customer perspective, right? So how is this intersecting? How is the intersection of fintech and banking, including this risk of disruption, looking at it through the lens of the customer? So we know that oftentimes an interaction, your and my interaction with the bank as a customer is oftentimes fraught with friction. There's always all kinds of red tape usually. There's lots of forms that have to be filled out, et cetera. And of course, it takes time, right? The response time. There can be a significant amount of time required before the bank gets back to us. And that can be very frustrating. There can be service, product, and access limitations as well. Something as simple as, the banks are only open certain days of the week, Monday to Friday usually, for certain hours. With an app or with a fintech product, essentially, you can access it at any given point in time, right? You don't have to wait for the bank to be open, for example. Very, very different basis of interacting. However, we know that the banking or banks are a very important part of all of our lives. Banking is considered a public good. Why? Because it is impractical for us to be walking around with our money in our pocket or stuffed under a mattress, right? That would be silly. Instead, having money at the bank, a bank that we can trust, the bank that we know our money is going to be safe, gives us a lot of peace of mind and really makes our lives a heck of a lot easier, because we all need money to pay for all of the things that we need, whether they be food or a new pair of shoes or rent, right? Or for the house that we need shelter. So in addition to that, there's an urgent demand increasingly for underbanked as well as unbanked parts of the population. Generally speaking, a rule of thumb appears to be that approximately 5% of the population of most developed countries is actually unbanked. Yes, unbanked. And there's likely another 20 to 30% of the population that is underbanked. The distinction, of course, being unbanked, being people who do not have a bank account at all. Underbanked are people who do have a bank account, do have a relationship with the bank, but are not being fully serviced, whether that is access to investment products or access to a loan, for example, an area that fintechs have been particularly active in. And the last thing we can observe is that your generation, the millennials, I think you guys are at the tail end of the millennials, but millennials are extremely comfortable dealing with technology, and they actually exhibit a preference for self-service as opposed to a service offering, right? So the fintechs fit in that very, very nicely. And with that little device in your pocket, makes it that much easier and much more palatable to go the self-service route as opposed to dealing with the human being, which has oftentimes, has with it a lot of other frictional costs related to that. Looking at this intersectionality from the bank perspective, the banks are aware that the fintech growth is indicating a high risk of disruption. And that essentially means the loss of revenue, including what is very important to banks, and that is the cross-selling opportunity, right? When you open a bank account, a checking account with your bank, probably one of the things that's going to happen is the bank, will reach out to you and say, hey, would you be interested in opening a savings account? Hey, would you be interested in this investment product to move some of these savings that you have to generate a higher return? Hey, would you like a credit card? If you're thinking about buying a home, would you like to talk to us about getting a mortgage, right? Those are all examples of cross-selling. And banks want to do that because one, it means more revenue for them. Two, it means you are tied much more closely. The customer's tied much more closely to the bank, right? And that means that the bank has a larger share of wallet, of that customer's wallet. However, there's a question in terms of fintechs and banks kind of getting together. There's a very significant difference between the banking corporate culture and the buy-in into doing these types of things. You have to remember that banks can be quite hierarchical. They can be very process-oriented. And importantly, a lot of the reason as to why banks are structured the way they are is because of the regulatory oversight, right? A lot of things, the majority of things that banks do and the frustrations you and I run into when we deal with banks is because the regulator requires them to show evidence of this documentation or of these steps being followed. Now, remember, as much of some of that is frustrating for you and I when we deal with our banks, don't lose sight of the fact that some of the reasons or some of the things that the bank is doing is actually part of what allows you and I to sleep well at night, knowing that our money is safe in that bank, right? That regulatory oversight is an important ingredient of ensuring that you and I can rely on this bank and that tomorrow or next month or in 6 months' time, the money that we have on deposit in that account will be available to us and the bank will still be solvent. A couple of other things to keep in mind is that tech spending at almost every single type of bank I've seen in many, many parts of the world, whether it's developed or developing, huge part of the expense base, usually 25+% of selling general administration, SG&A spend is actually tech related. So a pretty big chunk of expenditure is actually on technology. And of course, these functions are critical across the banking operations, and the integration of fintech or changing some of these legacy systems brings with them a lot of risk, right? So the banks understand that there's an urgency to respond. However, there are other costs involved in terms of making that, whether they're legacy systems, whether they're customers willing to interact, and whether in fact they can test the depth of the customer relationships that they have. Banks are also dealing with a demographic shift, of course, that we see coming. India, as you know, 50% of the Indian demographic is less than 30 years old, right? Remarkable. That is the underpinnings of the incredible economic opportunity that is India. You look at China or you look at Japan, the majority of the population is old, right? If you look at Japan, Japan is the oldest country right now, large country right now in terms of demographics, right? There are more people that are 60 years and older, and getting older and older, by the way. There are more people that are over 100 years in Japan, 100 years old in Japan than in any other country around the world, for example. Very, very interesting. And that has a lot of ramifications for what is going on, either in the country, economically, and of course, what the opportunity, what the demand for services, et cetera, is going to look like. So the demographic shift is really important to keep in mind, and banks are aware of that, right? Your generation, for example, it wants to interact with the bank very, very differently than the way your parents or the way your grandparents chose to interact with that bank. There, of course, the bank, as I already mentioned, has enormous regulatory considerations to keep in mind. And banks, unfortunately, are data rich, right? They've got these customers because if you need a bank account, you can only go to a bank. There's no other choice for the most part. So they have lots of customers that they have data on, but they are application poor, right? They have not been able to create the kinds of products and services and deliver them to their customers in a meaningful way in which to service them. Now, looking at this relationship from the fintech perspective, you can see that they have already spotted the fact that there's an enormous opportunity to apply technology to various service offerings, or maybe to the entire service offering as well. The fintech has the opportunity to increase accessibility to financial services, particularly to the underbanked, if not the unbanked as well. Right now, fintechs are beneficiaries of very limited regulatory oversight. And what that means is that it lowers the bar in terms of setup, in terms of process, and in terms of service requirements. Now, in my opinion, I think as fintechs get bigger and bigger, and they already are, some of them already are, they're already hitting that threshold for consideration by regulators in terms of whether oversight, what type of oversight, and when that type of oversight needs to be put in place. So I think regulation is going to start turning its attention towards many of these large fintechs. But for now, there's minimal regulatory oversight, which means that it's a lot easier to get a fintech up and running as opposed to a bank up and running, right? It's worlds apart in terms of what's involved. They also have an opportunity to use data mining to identify revenue opportunities, right? They can deploy this technology easily. And there's, of course, also an opportunity to apply alternate techniques. So moving away from using the traditional FICO scoring, for example, to determine whether to offer a customer a loan versus not. And this is the basic problem with the underbanked, right? Oftentimes that credit scoring, the data for reliable credit scoring in the traditional sense may not be available. And consequently, the traditional bank does not offer these customer services, or is unwilling to offer these customer services because it doesn't fit within the traditional banking model. But fintechs are coming up with alternate ways in which to offer these kinds of services to these individuals. So where banks are data rich, fintechs are functionality rich, but they're data poor, right? So the bank is data rich, functionality poor. Fintech, functionality rich, but data poor. They don't have enough customers. So they need more customers in order to do this. So in some respects, getting banks and fintechs working together or working better together would actually be quite an opportunity. And then Lastly, from the customer's perspective, there it is. No, I'm sorry, we went through that already. So we looked at the customer, we looked at the bank perspective, and we looked at the fintech perspective. So looking at it sort of through these different prisms or through these different lenses, hopefully is giving you a sense of what is shared, what is a shared perspective, and where some of those differences are, right? And identifying the shared perspective and identifying what those differences are is a way in which to kind of bridge some of those gaps and make this a better perspective. Last but not least, I wanted to just briefly touch on this because in many respects, cryptocurrencies and blockchains are really fintech. They're highly, highly dependent on technology. In fact, they are technology if you think about blockchain. So I just wanted a very, very quick slide to just touch on this. As we know, cryptocurrencies, whether it's Bitcoin, any of the stable coins, etc., they're essentially an alternate currency. And it's built on technology, right? It's built on what's referred to as the distributed ledger, i.e. blockchain. And this alternate currency, it's national government agnostic, it is regulator agnostic or independent of any of these. It transcends borders, it transcends everything, essentially. However, as Bitcoin and as these cryptocurrencies have become very popular amongst retail clients in particular, regulatory oversight is coming. In fact, here in the United States, the Securities and Exchange Commission has a project underway in terms of looking at what type of regulatory oversight should be necessary and how to go about implementing. They are literally in process in doing this. And part of the reason is, of course, there's been an explosion in the value of cryptocurrencies that are circulating. But importantly, it's a little bit, up until now, it's been a little bit of like being in the Wild West or the old Wild West. There are a limited number, there are no rules really, there's no oversight going on. And there have been a fair share of frauds and hacks and all kinds of things, right? And retail customers, right? People are being harmed as a result of this. And consequently, you have the regulator taking a look at. The cryptocurrency is clearly extending the payment system or the payment option. And currently, of course, it's operating in a parallel world, in a parallel universe almost, because it is completely separate from the regular financial ecosystem or the regular payment system. And of course, blockchain, which actually is, in my opinion, one of the most valuable and useful components of cryptocurrencies, this technology, which is, in my opinion, just phenomenal. It's being explored to apply to a range of applications. Smart contracts, volume transactions, independent verification, even financial reporting, right? Financial reporting can now be essentially enabled real time if the company's activities are essentially sitting on blockchain. At any given point in time, you could have access of a fully independently verified information on the economics of that company's business. By the way, that also means that the auditing profession is going to be undergoing significant change because the nature of the audit function of a company's annual report that's using blockchain is going to change dramatically. And on that note, let me pause and see if there are any questions. And I can already see that there are a series of questions in the chat right now. May I?
Yes, ma'am. Thank you, ma'am. It was a very interesting and informative session. Thank you for giving us a detailed explanation on fintech, starting right from the basic and covering all aspects of fintech, including the customer's perspective, investment trends, banking, and much more. So now it's time for an interactive Q&A session. We have a lot of questions from the audience. So the first question is, how does fintech change financial management?
Interesting question. So fintech is really enabling a way in which to look at how finance is being managed. Uh, and in fact, at the individual level, fintech is giving individuals more control, giving them more choices over the kinds of things. If we think about this from a company perspective, the way in which a company manages its operations is also changing dramatically. And we're seeing this happen in terms of the speed with which transactions are happening, are taking place. We're seeing this in terms of the cost of transaction, right? The cost of transactions is coming down as well. And typically when the cost of transactions reduces, the volume of transaction tends to go up as more and more and more transactions can essentially come through. So we're seeing essentially across a range of activities, if I can use that word broadly, of the way in which fintech is adjusting or affecting the way in which our financial system is continuing to operate.
Thank you, ma'am. I think that would have made it clear. The next question is, at present, in which sector do you think fintech is being used to its fullest potential?
It seems as though, at least my observation, is that payments has attracted, no, actually, that's not true. I think the lending segment attracted a lot of the initial fintechs because the expectation was that traditional bank model, at least in developed countries, that is primarily based on a FICO score. There was lots of room essentially to make changes. That very quickly gave way to payment processing, and payment processing has actually become bigger. It's become even bigger, and it's become bigger because there's payments that are not just between customers and companies or customers and businesses, but payment transfers between customers, right? Think about being able to transfer funds between friends because one friend paid the bill at a restaurant and all the rest of the friends who were at that dinner essentially very quickly transfer funds from their bank accounts directly to the person who paid the bill. So the opportunity I would say that the opportunity within the payments segment has been the biggest, and it is less exposed to credit risk, obviously, but also it's also a shorter time frame, right? It's almost instantaneously. And the other aspect of payment is because of the frictional costs that were involved, both in terms of the time for transfers to take place, so if you were moving money from one bank account to another bank account, as well as across geographies, right? Fintechs essentially eliminated that time lag, first of all. But don't forget, it has done that. Like PayPal, et cetera, are doing all of those things outside of the banking system, which is fine for the most part. And then the second piece is what used to take 2 or 3 days to move money from, say, Canada to India, for no other reason other than the way in which the banking system and the correspondent banking system works between banks in one country versus banks in another country. Because remember, when you cross a border, you're changing the regulatory regime that the bank is operating within as well, right? So that adds a whole series of considerations. Well, the fintechs can transcend that essentially. So that would be sort of the way in which I would characterize the way in which fintech has rolled out. But whether there are other areas, I think there definitely are other areas that fintech lends itself to, and the successes that you've had with lending in the credit space, in the payment space, et cetera, can now, and we're also seeing in the investment space, right, with robo advisors, for example. That's essentially applying technology to being able to sift through based on risk appetite of the customer, being able to sift through and be able to make investment recommendations. That's what the robo-advisor business model is all about. So already you can see how the penetration across that banking value chain is growing and really making change happen. I hope that answered the question. That was a big question to answer.
Yes, ma'am. Thank you, ma'am. And the next question seems to be a customer query. Not all parts of the world have equal access to fintech. What steps or actions, according to you, will make fintech simpler, understandable, and accessible to all people?
Okay, so let's think about three components, right? The first component, as we saw in that RBI report, the slide from based on the RBI report, is technology access, i.e., mobile technology access. So the good news here is that mobile phones are becoming less and less expensive, or for the same price becoming more and more powerful, right? So that is actually really, really an important component. Second is broadband, right? Data services access, because you can have a great, powerful mobile phone, but if you can't connect to the internet, that's limiting as well. So this combination is essentially critical. And then to build on top of that requires some of that shared infrastructure. For example, you don't want, three different payment fintechs all trying to create some proprietary infrastructure to make things work. Because if you were to go that route, the compatibility, right, between these different infrastructures is going to become a problem, which means that you create these ponds as opposed to creating an ocean that everybody can participate in. And that's why I actually wanted to highlight that RBI report, because setting up that infrastructure becomes so helpful and so valuable to enabling fintechs to be able to create, which of course in turn gives consumers more choice, right? At the end of the day, usually government policy is focused around giving consumers choice. A monopoly almost never works if you think about business. Monopolies are great for the business, they're terrible for the consumer, right? No choice, high price, and usually a lack of innovation. Whereas if you have more entities that are competing in the space, all of that changes. Price goes down, innovation goes up, because all of these different entities are going to try and differentiate each other, which creates more product, more service opportunities, and the customer has a choice of different entities to choose, service products and services to choose from.
Thank you, ma'am. I hope that works one day. And the last question would be, what is your opinion about completely digitalized banks?
I think completely digitalized banks have their advantages and their disadvantages, right? It ultimately depends on how you want to interact with your institution. So, for example, in this world where everything is electronic and we essentially don't need cash, right? If essentially I can use my phone to pay for anything and everything from a chocolate bar to, I don't know, a house. Well, that's a silly example. Everything from a chocolate bar to a refrigerator. If I can use my phone to do that, whether I'm accessing my credit card or whether I'm accessing my debit card, it doesn't matter whether I need to go to the bank or not, right? So a digital bank can be very, very useful. Now, in order for that to be very, very useful and to remove those frictional costs, there has to be an easy way to transact with the rest of the economy. And that includes other banking institutions. So the idea of a digital bank is actually very persuasive, because if you can enable those transactions, you're set. And remember, from the perspective of the digital bank, not having to have branches and all of those different services lowers the cost of running that institution. Now, your technology component may be higher, et cetera, and a different mix of jobs are probably going to be there, but you don't have to open branches, right? And that physical bricks and mortar of that branch is a fairly significant cost, essentially. And if we're not going to be paper money based, we're going to be digital money based. Well, that, removes a lot of other costs associated with that as well. And by the way, I didn't mention this, but there are a large number of central banks that either have issued central bank digital currencies, CBDCs, or are in process either uh, rolling out digital currencies or exploring digital currencies. So you have the central bank, the People's Bank of China, you have Singapore, you have Sweden, you have the Bahamas, who've all issued digital currencies. You have a host of other banks, the ECB, the Bank of Canada, the Federal Reserve, who are either exploring or on their way to issuing digital currencies, right? So paper money, as we know it, may increasingly be moving out, and that would be a huge positive for digital banks. As we become, as that device in each of our pockets becomes more and more powerful, right? And the adoption of the willingness to be able to use that device becomes more and more common. Perhaps some of your grandparents are very uncomfortable with the idea of using their cell phone to do these sort of things. They prefer to walk into that branch, talk to that person that they talked to last week or last month or whatever it is, right? It's a different relationship. It's a different basis for doing that. You, on the other hand, would be happy never to walk into a branch, right? Do everything on your phone at your time, whether it's at midnight or whether it's at 2 o'clock in the afternoon, on your time, on your schedule, right? Very, very different perspective. So as we're moving entirely towards, a full digital experience, we still have a part of the population. And I suspect even within your generation, there's a small fraction of you who would be a lot happier if they could go into the branch and not be doing everything on their phones because they're a little worried about their identity being stolen or whatever the case might be, right? Because even though things are getting better and better and cybersecurity is not as problematic, there are still periodically hacks that take place, and it can be a little unnerving, when you're affected as opposed to, or even just reading about someone else being affected. So that's not necessarily going away, right? So we have to kind of think about just how digital can we get. Maybe perhaps not over my lifetime, but maybe over your lifetime, we do end up going completely digital. But this concept of a digital bank, in my opinion, will go hand in hand with that evolution, with that development.
Thank you, ma'am. So we're done with the questions from the audience. So since we spoke about the digital currency and the traditional payment systems, I have one question from my side, ma'am. The last 2 years was completely pandemic, and none of us had the option to even do the traditional payment system. Every transaction we routed through was only through the bank accounts, and it was all financial using the technology. So, what do you think? How do you think these 2 years has affected the banking sector? Was it positive? Was it a good fintech growth, or how was it, ma'am?
This 2 years and counting that we have all been living through this global pandemic has resulted in pretty much every country, as you're observing in terms of your own personal experience, has accelerated digitization, essentially, both digitization and digitalization, right? Companies have been pushed. They've had to move faster than they originally had planned to either go completely digital or to transform their operations for a fully digital world, right? It's not just about taking what's analog and turning it into digital. It's about rethinking the way your business is operating. And pretty much, and it isn't just the banking system that has had that experience, pretty much everything across the world. Think about every retailer, right? Who no longer had people coming to their shops because they couldn't even open their shops. all of them essentially went online. And while it was initially, an additional expenditure to set up the website, set it up properly, make all of that product available, build out the inventory system so that it is connected, so that when you went online and it said that you could buy that, there was actually, that merchandise sitting on the shelf that could in fact be sent out. All of the logistics attached to fulfilling that order, right? And dealing with returns, et cetera. So a lot of these businesses initially had a significant amount of work, but now that they've put in that work, they're recognizing this is actually has a lot of advantages, right? Think about it. Just like the bank, the digital bank that doesn't have to have that occupancy cost of the bricks and mortar branch, the same thing with the retail operation. They need a distribution center, and that distribution center could be anywhere, right? Think about a luxury goods company who can ship essentially across the world, or think about a company that is primarily based in one city that is shipping across the country now, let alone just selling locally, right? For example, I can go onto a website for a wonderful spice and saffron shop in Kashmir and order Kashmiri saffron, right? I'm sitting here in North America being able to access that, and that shop, that store ships it out to me essentially, and I can get it within a matter of days. We're miles apart. It's irrelevant. Before, I had to fly to Srinagar, walk over to the shop, buy the product. How often am I going to be able to do that? Whereas now I can sit here and instead of, taking the flight and doing all of that travel, which is actually it's kind of not so great because I don't get to travel, but everything can come to me in my time as opposed to that. So it's a win-win on both sides. I think it's been an acceleration in terms of this transformation, if you wish, of truly going digital as opposed to, just this ad hoc, little bit here, little bit there. It's been a rethink, and it's also expanded the opportunity that's available to both the customer as well as the business.
Thank you, ma'am. Thank you for patiently answering all the questions. Now I call upon Ms. Hanswati to propose the vote of thanks.
A pleasant morning to one and all present here. At the outset, I thank the speaker of the session, Ms. Alicia Atamble, for sharing her knowledge on the topic Traversal to FinTech World. Your explanation about the FinTech world gives us a lot of new insights, and this definitely widen our knowledge on drivers of FinTech opportunities and FinTech in banking sector. Thank you, ma'am, once again for being a part of the conference. Thank you, one and all.
Thank you so much for this invitation. I was thrilled to hear about this college, which is all women. I cannot tell you how exciting that was to hear that. I wish all of you the very, very best. It's been my absolute pleasure to participate in your conference. Thank you.
Thank you, ma'am.
Bye, everyone.